Folks, welcome back to the Taylor Tax Show, the podcast that helps highly paid, highly taxed, high profile, ultra high net worth individuals and high net worth taxpayers save a bunch on taxes legally and perennially. I'm Terrence Taylor, the co founder of Taylor Tax, and I am an enrolled agent. This is Big Al Darnell Jr. Say, what's up, Big Al?
Going on, everybody? I'm Big Al, and I love my mama. And I'm also an enrolled agent and also co-founder Taylor Tax, LLC.
That's right. Folks, believe it or not, this is how to use life insurance to pay for your children's education. So, Big Al, this one is the gift that keeps on giving, life insurance, that is, right? We've talked about so many things that folks can do with it. Today, we're going to deep dive on how do you actually set up a life insurance policy that allows you to pay for your children's education? And then, how does that compare to other alternatives out there, like the Coverdell or other education savings accounts like the 529 plan? And then we'll talk about some of the benefits that life insurance has over those plans. And then we'll close. How's that sound?
Sounds like a plan. Sounds like a plan.
Well, let's kick it off. So just a quick overview, because folks, we've been telling you for the last few episodes that you can use life insurance, permanent life insurance that has cash value very strategically. And here's another real life application. So picture this. You have a child. Child may be very young. Big Al has daughters that are 5 and 8, or the child may be teenage years. My kids are 14 and 16. And you set up a life insurance policy to take care of their education. So what you do is you get them as the insured, and that gives you a relatively low premium. But because the name of the game is using life insurance strategically, you may choose to actually pay a lot more than the minimum premium that you are supposed to pay. Because what we're interested in is not the death benefit. We're interested in building up cash value so we can take out loans tax-free that allow us to do a bunch of things for our kids when it comes to their education. So depending on your child's age, you can pay for their creche. You can pay for their school uniforms if they need school uniforms. You know, that back to school shopping that we come to test as parents, just confessing there, Big Al. You could use the money from the life insurance policy to pay for back to school shopping. But the beautiful thing is the life insurance policy allows you to pay for anything that your child needs without you needing to ask anybody. There's no restrictions on what you can use that money for. And remember, that money is tax-free in your hands. Big Al, let me pause there. That's just the mechanics of how you jump in and share your thoughts.
Yeah. So the thing is that I think that's the main takeaway from using insurance to help fund your children's education is the lack of restrictions. You know, when it comes to the restrictions with these qualified plans for paying for education with the Coverdell, there are AGI restrictions and limitations. You can only make up to $110,000 if you're an individual, or $220,000 as married filing jointly, and you have to make under that just to contribute $2,000 a year per child. And then with the 529 plans, you can have any income, and you can have any income, and you can contribute up to $16,000 per year per beneficiary. However, when the funds are used, it can't be used on back to school shopping. You know, it has to be on like education, room and board, tuition, and technology. But there are things that these kids have to pay for. These students have to pay for beyond these qualified educational expenses. And also, if you don't want them to have to work while they're in college, you can even assign some sort of an allowance from it as well, so that they can go unencumbered and focus completely on the two main things with college, which is, you know, your academic education, the academic ascendancy, as well as the social components, because that's where the greatest level of networking happens. Everybody's meeting at college without the pretense of your job or your position or how much money you have. You all are meeting equally and have a phenomenal opportunity to forge bonds at that stage and state of life, so that as you continue to grow, I know you meet with people and still have business happenings with individuals that you met in business school from over 20 years ago, as so do I. So now by doing that it frees things up. Now, when we're looking at the total picture and the total landscape of it all, another benefit of using life insurance to fund your child's education outside of like the 529 Coverdell or even education savings bonds, which have a lower AGI restriction. The additional, oh yeah, AGI is adjusted gross income. Thank you. The other benefit that this has when you're looking at the entire picture is that we can shield from the government in this application process your complete net worth, because when we're talking about money or cash value in a life insurance policy, that does not go towards your net worth or AGI limitation when your children are applying for FAFSA or for financial aid. And that's another benefit. So in doing so, that shields your net worth or income from them being allowed or disallowed financial aid or educate or government grants and loans for them to assist with education. So, anyways, and the beautiful thing about that is you might think to yourself, well, wait a minute, why in the world would I need a student loan for my child if I've done all the right things and put money away, especially through this life insurance program? Here's the thing: is that capital is cheapest usually in the student loans. So if you could get a student loan to help pay for those direct student education expenses and still have the money from the insurance policy available to provide for the allowance or anything else, then guess what you could use that for as a down payment on a rental property for your child so that they can continue to make income and build assets and so forth. But anyways, it's these student loans have some of the best interest rates and best repayment policies out there. So you want to make sure that you have that option. Not saying that that is something that you have to do or that we would suggest. It's all a case by case basis, but it just gives you so many more options or so much more options.
Folks, for the first time in 37 episodes, I'm going to violently disagree with Big Al Darnell about taking out student loans. Because
Okay.
check this out. You got money that you've already taken out as a loan. When that money in your hand was tax-free. And the interest rate on that loan is likely to be less than the interest rate on student loans. That's one.
Yeah.
And unlike student loans that you got to pay back, any loan that you take out from your life insurance policy, if your life insurance policy is well structured and well funded, it's collateralized against the death benefit, which is going to be a much higher amount. And as long as that life insurance stays in force, your child's policy is going to have enough death benefit to keep the loan collateralized. And you may not have to pay that back if you choose not to. So I would never, ever, ever take out a loan that I got to pay back when I can take out that I don't got to pay back. What do you think about that, Big Al?
Well, I still agree with myself primarily because, yeah, well, here's the thing is that if it's available and we are playing this game of arbitrage, interest rate arbitrage. Now, guess what? Every insurance policy, I don't want anybody to think that, guess what? You set up an insurance policy and you have unlimited amounts to pay for anything that you can imagine or think of. No, you don't. You have a calibrated amount or a strategic amount that you can put in while you're maintaining your lifestyle and while you're building and growing. When you have young kids, there are expenses that come up out the wazoo, whether it's summer programs or medical issues or even opportunities for them to join groups and clubs that can help them get into the Ivy Leagues or internships with the White House and other government entities, et cetera, et cetera. So all I'm trying to say is this, is that you want to have the...
Folks, looks like we have some technical difficulties with Big Al's feed, but I think you get the gist. Oh, you're back. Okay.
Okay.
All right.
Yeah.
Pick up where you left. You're talking about different expenses, like medical expenses.
Yeah. Well, what it does is it just provides you with the opportunity to use interest rate arbitrage to fund so many more things for your life and your child's life than you would had you not had it. For after getting out of college, you will not be able to have access outside of your insurance policy to any type of loan that you'll have to pay back at less than 5% or 7.5% interest rate unless it's real estate. So now it's just providing opportunities for them to build assets while they're in college, as well as pay for college and then pay it back, because the return on investment could be twice as much as what they're paying in interest back, especially if it's going to be deferred while they're still in college without the gaining of interest. So it's just something to think about.
Here's where I do agree with Big Al Darnell Jr. You didn't see this one coming, Big Al. One of the things that I get really excited about and emotional, I want to channel my inner Whitney Houston. I get so emotional, Big Al.
Baby.
I get really emotional about what types of strategic things can be done with that life insurance policy on your child that you now have access to the cash value. Up to 90% of that cash value is loan and what you can do for your child while your child is going through education. So we talked mainly about young kids because our kids are not in college yet. But imagine being in college. So picture this. Most of us, those of us who went through college, you got to pay for a dorm room or whatever. Normally, your freshman year, you got to stay on campus, but some schools allow you to stay off campus. So you can get very strategic as a family, and you could take the money that you have in the life insurance policy, the cash value, accumulated cash value, and you can use that as a down payment on a property that becomes a rental unit that your child stays in, pays rent on, and then rents to other students. So while your child is going through school, for those 4 years, for example, they're going through college, they may walk out having built themselves enough equity in a property that they now have a second equity center to tap. So I agree with Big Al on that. All right, Big Al. The thing is this, we could wax lyrical about all the benefits of life insurance. I mean, this is midway through a 14 series episode, right? A 14 part series on insurance and what we can do with it strategically. Any closing thoughts from you before we wrap this up?
No, no. Oh yes. Just think about the full circumspect of why you're utilizing this and what you can do with it. Thing that we're relaying with this 14-part series with insurance is not to think about insurance from a traditional standpoint or even one or two aspects of a non-traditional standpoint that you can take advantage of with taxes, but there are almost endless opportunities in the grand scheme of insurance and taxes, especially cash value based insurance and benefiting on taxes for you, your progeny, their progeny, your parents, and your lifestyle while living. Life insurance isn't just about death. It's about while you're living as well, if you strategically use it the way that we talk about. And you can really set up your children from the age of 18 or well beyond to take advantage of life, to take life by the throat instead of, I didn't want to say kahunas in the, take life by the throat or by the collar,
Yeah,
and really slam dunk it. But that was my final thought on that.
folks, there you have it. So if you want to check out the Tailored Insurance Guide to help you answer your questions about life insurance, how to use this particular strategy, you can find it on the OpenAI GPT store. So they're the parent company of ChatGPT and the recently released Sora, which is going to be amazing. But let me not digress. And you could also get in touch with us, Terrence at tayloredtax.ai, at TAYLORED tax.ai, or Big Al at tayloredtax.ai, BIGAL at TAYLORED tax.ai. Man, that's a mouthful. So you can also check out the Tax Strategies GPT to answer your generic and specific tax questions, also available on the GPT store. Thanks, folks. See you soon.
Cheers.